Hey, welcome everybody. Welcome to your daily trading tip of the day. We're looking at Facebook charts on daily, 2-day and weekly time frames. Facebook's done particularly well in a market which has looked a little shaky over the last month or so. And we can see quite clearly that we've got higher lows and therefore increasing uptrend on this. So what we're looking for is confirmation of continuation of a trend. Still plenty of green volume kicking around, as you see there, on all three time frames. And we have green trend on all three time frames. So if we're not in Facebook already, where could we get in, and also what strategy would we use to play this particular trading idea? Well, look, we've got a pivot high there that we see from last week, around about the close for last session. So if we just put a horizontal line on there just to show you, there we go. And you'll see it just closed below that. So we haven't had a close above that pivot high all week, even though we've had these really higher lows over the last 4 sessions. So we are potentially ramping up for a breakthrough of that particular level around about 112.60. And as we've said, the other thing we need to consider is which strategy may be the most appropriate to play this particular trading idea that Facebook may have more upside. Well, look, first thing to say is, of course, we've got a bigger pivot high at 118 there. So that gives us some clues. Secondly, of course, we do have a market which just looks as though it may be running out a little bit of steam at this stage during the week. Oil's looking a little shaky. We have got a long weekend ahead. So perhaps a trade which is slightly more conservative may be a way to look at it. So there are two potential ways we could play this. If there's a close above that line we've put by the pivot high, we could look to place a credit spread, a bull put spread, down beneath the 110 level. That looks where there may be some support. We've got a pivot there just above 110. You'll see we've had two tests over the last 6 trading days. So a 110, 109 with a couple of weeks to expiry as a bull put spread would be one way to play this. The other way would, of course, be to play the potential that it may go up and touch 118 again, in which case looking towards a bull call spread with a little longer to expiry, perhaps looking towards an April if you're feeling quite aggressively bullish, or maybe a May 117, 118 bull call spread, with the idea that if it gets up anywhere near that level and then starts to flag a little, we'll rip it off and take whatever profits in it. So those are the two potential ways to play this. In light of lower market volatility, we may struggle to find a fill on that credit spread that we mentioned that's acceptable once we take out things like fees, etc. That may be dependent on which broker you're with, of course. That may be a reason why we would not look at the credit spread idea. The reason we may not look at the bull call spread idea is, of course, it's got more work to do in a market which looks as though it's struggling. So those are the two disadvantages of both the strategies. I trust that's been useful and interesting. It gives you something to have a look at for today. And we'll see you again after the long weekend. Bye-bye for now. And that's just one of the trades I'm considering for today. So before we go, if you'd like to see everything I'm considering and see the trades I'm really taking, why not take a trial to my Options Elite alert and trading service? That way, you can see exactly how I find the best trades that can produce the largest returns whilst keeping the risk low. Just click on the link below and get started today. You'll be glad you did. See you soon.